not as many people would go to Pinterest every day. It's kind of like you're probably shopping, but you're curating ideas. It's not the same as an Instagram or even a Snapchat.
Yep. I'm a decade active user, as an example.
This podcast contains the arguably witty banter of two friends, Skippy and Dougals, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Skippy and Dougals into Hit House, and we got a special episode for y'all today. As we previewed last week, we are doing investment committee for the first time this week. We'd love your feedback, skippydougals@gmail.com. Let us know what you think. The good, the bad. How terrible is Skippy in this episode and how amazing is Dougals is what everyone wants to know. skippydougals@gmail.com. What are we talking about today?
Pinterest. Have you ever used Pinterest? I've never
Pinterest.
used Pinterest.
I have. I've used it. It's been a hot minute, though. I think the last time that I used it was in 2017. So it was before the company even went public is the last time that I used it.
So basically, you've never used it.
Yeah, but for all intents and purposes, I've never used it. Yeah, I've never used the product.
When we put out the call for investment committee, we got a bunch of names. Pinterest had recently dropped pretty big and it looked fairly cheap. So as we sorted through all our names, we said this would be fun to take a deep dive into.
Mm-hmm. Yep.
Pinterest, correct me if I'm wrong. I'll start with the high level. Pinterest is technically a social media platform. They're in this, I'd call it identity crisis, where they also claim to be a search platform and an AI generated engine and who knows what else.
Yeah, I don't know. I don't know if I'd call it identity crisis.
Okay, go ahead.
I think they have a view. The CEO, Bill Reddy, has a view on what they are, and he states that pretty clearly. Whether or not you believe it, that might be your identity crisis about Pinterest that you are putting onto them. But I feel like they know who they are.
Who does Bill Reddy think they are, just for the listener?
They are an AI-powered visual search and discovery platform.
Oh, my goodness.
That's their identity.
When people call me up and say a bunch of buzzwords and say, I need help with my business, I go, yeah, you need help with your business because you don't even know what you do. So the really cool thing about Pinterest, really cool, and maybe this unique corner of the market, is you can go to Pinterest and you can be like, I want a jacket that's dark colored and warm. It kind of shows you some stuff. And then it leverages the true human expertise with, as you search through that, what you are compelled by.
Yep.
That powers their AI engine, which makes discovery better. In a perfect world, that leads to purchasing decisions, and those purchasing decisions drive revenue, and it's like this really unique thing. Another example that, just so I'm clear, you can be like, I'm looking for this type of furniture with darker wood or lighter wood for this type of room, and it shows you a bunch of ideas. Go ahead.
And because there are 600 million people roughly use this on a monthly basis, so that means there are about 7.5 billion people that don't use it. So I just want to add one additional layer of detail into what you said. I think that was a good description. If you come onto the platform, think about it, you can type whatever you want in as a description, and it will give you pictures that you can then pin. There are also videos. Now, I didn't realize that. That was after my time when video came to this platform.
You mean in 2007 when you're on the site? You didn't have...
Yeah. In 1993, when I discovered Pinterest. And so when I know it was buzzwords, visual search and discovery, but just think about that as you were searching pictures. If you were on Google Images and you type things in, and then those Google Images were things that you can then put onto what they call boards, so you can save your own board. Like when I used it, the reason I used it is when we were planning our wedding. And what did I want at my wedding? I wanted a beer garden. And so I wanted to know, what might that look like? This is the time that I used Pinterest. So I looked for ideas for how I could decorate my beer garden.
I just assumed you wanted like a Free Willy statue at your wedding. And I don't know why, but you're a big whale guy, I think.
I also looked for Curious George vests, but
that is right.
So you were closer.
When you're trying to find the right Curious George decor for your beer garden, the Pinterest is a place.
Exactly.
I mean, I have so many thoughts. This could be an hour conversation or this could be a 5-minute conversation, depending on how much detail we want to go into. There is this really unique corner of the market that Pinterest seems to own.
Mm-hmm.
And this idea that because they have this unique corner of the market, because their active user base grows, and let me just give you some high-level stats there. Like, you were at 500,000 users at the start of 2024. Now you're at almost 620 million monthly active users, 12% year-over-year growth, 10 consecutive quarters of record monthly active users. Yep. It's good. Why do they talk monthly active users when someone like Instagram, Meta talks daily active users? Because you don't go to, not as many people would go to Pinterest every day. It's kind of like when you're carving something out, you're probably shopping, but you're curating ideas. It's not the same as an Instagram or even a Snapchat.
Yep. I'm a decade active user, as an example.
Killing me. Stock is, okay, kind of cheap in some ways, super expensive in other ways. But
where is it super expensive?
We're going to get there.
Okay.
You just wait.
Okay.
You just wait. Okay, so let me just give some high level. This is what the stock looks like. Current market cap. Well, and so we have to give the caveat. One, don't buy the thing unless you do your own research. you have to wait for the end of the show to figure out if Douglas and I are even considering buying the thing. That's your surprise at the end. We give you the verdict. You should read the 10K. You should do other stuff. You can listen to this episode and be like, oh, that's cool. I learned something about this business, but don't invest on it. All right? Don't be stupid. So the data I give, unfortunately, some of it will be from the 10K from 2024. Some will be from the 10K from 2025. Some will be from my research assistant, which is typically Claude or Notebook LM, compiling data for me. Some will be Morning Star stats. Some will be Koifin stats. It's not all perfectly going to align, just so we know.
Wow.
All right?
You fancy, huh?
That's right. But I'm going to start with some Morning Star stats. Okay?
All right.
So we are in the third week of February of 2026. Price to earnings ratio at 29. Current market cap is about $11.8 billion. There are about 665 million shares outstanding. It's a very interesting thing we're going to come back to. 52-week range of the stock is effectively what? It went from almost $40 a share to almost $14 a share.
Yep, that's right.
That's why this is an interesting name.
And in that direction.
Yeah. It currently trades around $18 a share, and it's actually the price is appreciated in the past few months. Okay, revenue growth numbers: 5-year revenue growth, 20% compound annual growth rate. 3-year, 15%. 1 year, 16%. Price to sales ratio of 3. Am I going through this too quick? Do we need to explain any of these metrics, Douglas? I think these are pretty straightforward.
Keep going. Yeah, keep going.
Price to cash flow of 9, which is interesting.
There we go.
And current buyback yield, this is a loaded metric, of 11%. There's more going on with stock-based compensation that we're going to talk about a bunch. Morningstar has this metric that I really like. It's a normalized price to earnings ratio.
Okay.
And it takes out stock-based compensation and other like weird stuff that theoretically could be. That number is at 11. The difference between that number being at 29 and being at 11 is one of the things we're going to talk about with this company. The other thing I want to mention, current ratio, current assets to current liabilities is 7. It's interesting. It's like they have too much cash on hand in a way, and I'm not sure why. Debt to equity ratio of 0.06, basically no debt in the grand scheme of things for this company, which is appealing.
I was spending time reading through the debt and liability section and different notes and their line of credit that they've had and extended. I was spending my time there and I was like, what? Why am I doing this? They have no debt. It's all just theoretical. I need to move on.
Yes. Okay. That's the high level stats, high level business overview. Where are we going next, Douglas?
I want to dive a little more into the business side of it for a second.
Okay.
So their business is ads right now. This is not a diversified revenue base that they have. They are an advertising platform. And one of the reasons that's important is just from a high level understanding that it's not that diversified. But the second reason is, given where you started when you were describing what Pinterest is, understanding the side of advertising that they're on is critical, because that's a lot of where their multiple comes from. As you stated, or maybe as I stated, this is a discovery platform, and you gave a couple examples of what that discovery can look like. And so they're top of the funnel predominantly. They're a top of the funnel platform. So you're going on, they have 90% unbranded searches, which means you're not generally searching for Nike or Reebok or a specific brand. You are searching for a jacket that is brown that can keep me warm in the winter, whatever. So the question then becomes, what is the intent of that user? Is the intent to create a mood board, or is the intent to buy?
Yes.
And that's very important from a monetization standpoint within their business and from a valuation standpoint, both of those. So I found it interesting to look at the ARPU, annual revenue per user, for Pinterest, how that's changed over time. And then I compared it to the beast mode in the search and monetization space, or not in the I'll call it discovery and social media monetization space, which is Meta, just to look at the difference between those two, because I think that it's very helpful. So if you look at just the dollar value, any questions on that actually before
You're going straight to the most interesting idea behind Pinterest as an investment. It's, are they unique? Are they unique enough that they will always have this niche of the market? If so, there's some really exciting possibilities about that ARPU. They're also really challenging. Or are they unique, but they're this little fly under the elephant that is Meta and Google and anyone else that's so much bigger, that has so much more money, that just like Meta just accidentally steps on them and destroys the business model overnight. That's, I think, part of the decision you have to make.
Whoa. Okay. All right. Let's go back
Is
to
that
ARPU.
not true? We'll get there. I swear.
Yeah,
we'll get
it's
there.
nuanced, but I do think that directionally I agree with that point.
Okay.
So if you go back to 2018, ARPU, annual revenue per user, on a global basis was a little over $3 per user for Pinterest. Today, that's a little over $7. So they have more than doubled the amount of money they're getting per user per year. Snap, snap, snap. Love it. Celebrate, everybody. Pot de champagne. Looking at Meta, two stats I'll put out. First is I went back to some early Meta days when Facebook. So what I was curious about was Pinterest is Pinterest. It doesn't have all the other stuff that Meta has. So I went back to Facebook. 2012, Facebook's same number, ARPU, $5.32. Okay, interesting. I was like, all right. 2025, Meta, the behemoth that we just mentioned, $57. That is a critical, when you're talking about the elephant stepping on the fly, after this time, Pinterest, which was founded in 2008, not too long after Meta was founded, just a few years, is at $7 per user right now. Meta's at $57 per user.
I mean, you're killing me, Smalls. You're like oversimplifying here. In addition to that, yes, great numbers. Great.
You're so condescending.
Sorry, I'm not trying to. I understand why you did that analysis, and I actually really like that analysis. But Meta's daily active users are in the 3 billions.
Yeah.
Social networks, what matters is network effects. The more users you have, the more pricing power you have for your ad network. It's apples to apples in a certain way, comparing ARPUs. But in other ways, it's like, no, this is like Jimmy's grilled cheese takeout shop on the one corner competing with McDonald's. And we're talking about pricing power of the cheese.
Don't bring Jimmy into this. I get your point, comparing network to network. But the reason I think it's important is because if you're an advertiser and you're thinking about where to put your money, you can see the difference in revenue there. Just use that as a proxy for how salivacious, that's when you salivate over something, how salivacious Meta's advertising network is compared to Pinterest. That's the reason I brought it up. Because you have to say, like, what is the real intent behind someone that comes into Pinterest and searches for something? Are they trying to discover and create a board? Or are they trying to buy?
All right, let's go straight into it. What's really fun and unique about Pinterest user base is it's about 2/3 women.
Yes.
And Gen Z is well represented. And sorry, I'll have to pull up my notes as to figure out. But Gen Z is a significant user of this.
Yep.
So it's Gen Z is 40% of the user base, also the fastest growing segment.
Yep.
That's amazing. Both those things, if you're shopping for, I don't know, coffee tables or whatever, or the next hip thing, those are really good users to monetize.
Can you name what the next hip thing is? Do you have any idea? When you say those words, what is that?
I have so many ideas. Don't get me started.
You have no idea.
It's the Nike jacket that self-inflates for different warmth. Come on.
Wait, the Back to the Future 2 jacket? No.
It's
just
amazing.
Next.
Next. They won't even, again, how much Nike stock do I have to buy for them to send me one of these jackets? It's outrageous. Okay. So let's continue on pros. The user base is actually really cool. The fact that the user base grows is really cool. It's amazing. The growth outside the U.S. is pretty dang good. Let me get you the exact stats. It is growing about, so 3 categories here. U.S. and Canada, about 105 million users. Europe, about 160 million users. Europe is growing 9% year over year. The rest of the world is growing 16% a year and has almost 356.
Yeah.
They call it 360 million users.
This part was pretty interesting to me. How dominant of the user base rest of world is and how little they monetize them.
So this is the whole story. Okay. So let's just spend 5 minutes on this. The current year, 2025, just wrapped up. Their 10K came out in February, I believe. Here's their monetization stats by those regions. US and Canada is almost $31 per user.
Yeah.
Europe, $5 a user. Rest of the world, 79 cents a user. Even if user growth is stagnant for a second, if rest of the world goes from 80 cents to $31, do you know how much more valuable the company is? Now, that's not going to happen. And this is where investing is hard. And someone that would want to buy this has to make this really critical decision. Why is the rest of the world hard to monetize? There's like 1,000 reasons. But the simplest reasons for a US-based company is that it's really easy to go fly to New York, fly to LA, fly to Austin, pitch these companies that need to sell stuff on Pinterest, get them into your ad network, monetize that with a user base you're familiar with, and actually show great return on investment there. It's fairly easy to do in Europe, but it's still crazy that they monetize you get 6 times more monetization in the US than you do Europe. But the rest of the world?
Yeah, I agree with that point. And this was one of the things that I thought was interesting when I was looking at the Meta/Facebook viewpoint, and going back to Facebook was helpful here because Meta doesn't break out the stats in the same way that they did back when it was just Facebook. It's very it's hard to be fully apples to apples in thinking about the absolute dollar figure value for monetization because again the intent, the platforms are different. There's higher conversion on Facebook. However, I thought that there could be even at its simplest way, some apples to apples in comparing the difference between monetization in the rest of the world versus monetization in the US, because both of them name the biggest factor in why they monetize differently is the maturity of those markets. Like that's the biggest thing. And so let's just say that's the same for both. In that world, there's about a 9x difference from what you just stated between rest of world and US from an ARPU perspective. 9x roughly difference. For Pinterest, for Facebook back in the day, that was more like a 4 to 4.5x difference. And so to me, it's speculation, right? Because there's execution and strategy. So much goes into it. It's really nuanced. But that gap, if they do it right, they should be able to close if they execute well. Like that's a gap that they should be able to close without any of the more market maturation, without other parts of the strategy. And I thought that was pretty interesting. And that's because it's such a large part of their business. It's like, that is free valuation if you can close that gap.
Oh, it's incredible opportunity, right? But right now, all round, you have to add 35. You add one user in the US.
Mm-hmm. Yeah.
And to equal that, you have to add 35 users in Japan or the Philippines or wherever else. And your U.S. user base doesn't really grow. It kind of is what it is, 4% a year. So if you monetize that rest of the world user base, this is a really, well, it could be. I still hate so many facets of it, which we're going to get to.
Yeah.
But it could be super compelling.
Yeah, exactly. It's the strategy is monetize rest of world, don't worry about growth. Like just grow the monetization of it. Grow the US. Like go from roughly a third of the US using, not quite, a third of the US using this product to more like half of the US using this product. If you can do those two things, cool. Not that that's easy, but that's the way to look at those in a different fashion.
Okay. You just said, just get half the US to use it. Right now, a little less than a third of the US uses it. My argument would be because of the unique user demographics, which have pros, younger and more women, a third is about where you tap out. That's your market saturation. Because the older crowd doesn't use it. Your average dude doesn't use it. And so it is what it is in the US and Canada to me. They're going to grow at single digits or flat going forward.
I know. It's tough. There were so many times when I was sitting in the research mode for this where Pinterest as an independent company stops making sense as a growth engine for part of the reason that you just stated.
Mm-hmm.
Because Pinterest being the engine behind a Google search or something like that, you start to go, oh, that's really like that starts to become more interesting. It's the engagement platform behind someone else's search. But anyway, I digress.
I immediately went to this is funny. I feel like it's 2018 or something. Like, why doesn't Microsoft buy it? Why doesn't somebody? I mean, Meta doesn't need it, right?
Yeah.
And there'd probably be antitrust, but
let's buy a worse monetizing platform. Like it just for what purpose?
When we can create threads from scratch and completely crush this thing. But yes, as a standalone entity, man, all these social networks blend together, right? Everything becomes this collection of what Instagram used to be with Reels, which are YouTube Shorts, which is stolen from Snapchat, which is WhatsApp user base. Like they just all blend together. Mm-hmm. And so being unique in the space 10 years ago, I think might have mattered. Now I feel like every social network is effectively monetizing time on platform with some sort of addictive video to sell you stuff. And I'm just not sure that it's unique enough to actually, I don't know, be interesting.
And it's not quite there. I'll get off of the acquisition thing in a moment, but it's not quite at that price. I feel like if it dropped down to about, it's called $7 billion, although I know the enterprise value is about $8 billion. But if it drops down to about $7 billion, it starts to get interesting. If it drops in half, going back to it's down 80% from all-time highs. If it goes down 90% from all-time highs, I think it's snapped up immediately. You get this to a $5 billion price tag, and it becomes a non-thought for some of these other organizations.
Yeah, because anyone can buy it at that point. Like one of the AI companies could be like, they have some interesting data.
I just started reading Going Infinite. I know you read this a while ago, the Sam Bankman-Fried book. He would buy it. I feel like Nicolas Cage would buy it. Anybody would buy it.
Sam Bankman-Fried, the greatest investor of all time. He just did it with stolen funds from his customers.
This book is so good.
It's great. I told you at the time.
It's just hilarious. It's hilarious is what it is. Anyway.
And what's so great about it is Michael Lewis doesn't care anymore. He's old enough and has enough money. He'll just write whatever he wants. And sometimes he just pokes the bear. He just writes to make people mad, and it's hilarious. Okay, back to Pinterest. Let me just look back through my notes. One thing worth mentioning is there's a huge tax credit in 2024 that confuses everything. So if you're looking at numbers and be like, oh, they turned the corner in 2024, not really. The ad networks, we've talked a bunch about Meta, but you effectively have to compete with these three parties that are the world's dominant ad networks, either Google, Amazon, or Meta.
Yep.
And so how's Microsoft Bing doing competing with those companies? And Microsoft's a $4 trillion company. It's just kind of like, how do you get the CMO to be like, oh, I have to write these checks to the three largest ad networks in the world, and then Pinterest, right?
Yeah.
And so, again, the uniqueness of the model is pretty nice because there's the right company that wants people to search based on how things look and not based on brand, and maybe Pinterest is the perfect engine for them. It's just a really limited case.
It is. And I'm trying to get away from the whole acquisition thing, but where my head, what I was searching for as I was going through this is I was trying to find the point where it gets to escape velocity. There are a number of solid bullets that go beyond speculation to me, like more credible than speculation, where the valuation of the organization could materially go up. When I say materially, I mean 30, 40, 50% up. Like there are a number of cases where I was looking, if this happened, if that happened, and they're fairly reasonable. But I was trying to find the escape velocity point. What I mean by that is the point where you go, oh, like this really starts to take off and there's no holding it back. Like something that starts to put it into more of like the metasphere. And that was very hard for me to find. I don't know if you have.
Okay. The problem with all these software names, we're into my ranting portion.
Okay.
Is stock-based compensation.
It's pretty bad with this one.
Okay. So 22% of revenue is the latest number I have. Stock has been diluted 28% since IPO. So it IPO'd at about 530 million shares. Going on 700. It's at 680 at the moment. This is, I mean, they in their 10Ks, they'll tell you they authorized $2 billion in share repurchases or whatever. There's all these talking points of it's all so great. But they're just actively destroying value. And maybe I'll rewind and just give a little breakdown. One of my fundamentally non-negotiables when it comes to investing is looking at share counts and making sure, usually, like 99% of the time, there's no dilution taking place. I prefer when they're buying back shares because that actually says they think their stock is undervalued at the moment. They want to own more of the company, which enriches you as a shareholder, right?
Yep.
So theoretically, in the past 2 years or so, share counts are effectively flat because they've started to buy some back, basically cover the stock-based compensation, which, again, if you aren't familiar with the Valley and have never heard that term, it's just giving stock to your employees quarterly or year-end bonuses, so they get more ownership. But so many of these software tech companies just treat that as like such a large portion of actual compensation that they they're just giving away the company. So I've looked at similar companies that I feel like have similar upsides, and they are managing the firm like it's precious. Like every share of ownership matters. They are rewarding shareholders maybe with dividends or increased buybacks. It doesn't feel like the management team actually cares, actually wants to like play big boy, get a seat at the big boy table. It just feels like they're like, oh, we have this company and some people like it and it has some potential. So we'll just give all our employees a bunch of stock and they'll sell that stock, and who cares if the stock price gets driven to zero? Everything's great. It's my
wow.
very, very technical take. It just feels like they're at the kids' table with stock-based compensation. That's the only way I know how to say it.
It does feel like an immature business. And in many ways from that standpoint, right? Because it's similar if you go back to Meta a decade or so ago. Very silly as well from stock-based compensation. It feels less mature than the age of the organization. And this is where I started looking more into Bill Reddy, who's the CEO. He became CEO in 2022. And he, I believe, has started to, from an operations perspective, mature the business in ways that it wasn't maturing before. So they're about 3 going on 4 years into that process. But it does read like it's an immature business in a lot of ways. Should we start to get into the verdict side of things? I think you already started on your verdict side of things. But
yeah, I mean, some numbers, this is through a LLM, but effectively PE ratio in the high 20s on GAAP terms, or around 10 when you remove stock-based compensation, right? EV to EBITDA, 28 to 8.5, et cetera, et cetera. If I don't want to run Pinterest, all right? So to cut to the chase, if someone else walked in the door tomorrow and said, we're reducing headcount by 35%, stock-based compensation is not completely done, but effectively over, and we will buy back every share that we'll just give cash bonuses, or we'll buy back every share. And the thing trades at a PE of 10, I'd give it a look. And I start to get interested, and they can clearly articulate how either they can grow to 1 billion plus users, monetize the rest of the world, ARPUs, or set them up to be acquired by I don't care who, but at a premium that's double their current price. This is where I talk about, I read similar things with other management teams who I feel like can articulate that clearly. And I go, yeah, I'll buy this. No, my verdict, I read through this. I took a 2-hour break to vomit about the stock-based compensation, and I said, I'm never buying this thing.
When I hit the stock-based compensation part of things, I knew where you were going to land.
I tried.
It's not egregious, but it's pretty bad. That's the way I would describe it. So I'm going to give 2 different sides to things. The first is I'll give my primary take, and then I'll give an alternative that I don't really believe in, but I'll just give it for folks that may be more interested in that, and then do your own research, as Skippy said before. So I've already mentioned that I was looking for the escape velocity point. There's a piece of that is this going to go up 3x, 4x, 5x? That's not exactly what I was looking for. More so what I was looking to do was to say, if I bought this, could I hold it for a little while? Like, would I hold this for 5 years, 6 years? Like, give it some time to mature. That's when, in order to have that view, that lens, there would have to be some kind of a multiplicative effect that I believe could be possible. And I never got there. That's the place I didn't get to. Here's why. The things that I think you have to believe for the stock to go up, and like I said before, I think that they're reasonable to believe. I don't know how probable, but they're reasonable to believe, is that Pinterest is able to leverage AI so that they can start to get a better conversion. So going from that top of funnel to more down funnel conversion, and you start to expand in your margins, and you start to get more into the performance-based side of advertising versus the brand-based side of advertising. So then the valuation multiple starts to go up. Mm-hmm. I think that that's reasonable. You have to believe that. And you have to believe that the revenue growth is double digits. They expand margin quite well. And while doing that AI isn't leveraged by the bigger companies to just completely disintermediate it at the same time. And that's where, to me, like when you start to play it out over 3 to 5 years, I go, I don't know if this might be what you were mentioning when you said a couple times, can they hold on to their niche?
Yeah.
I don't know. And no one knows. We never know anything. But it doesn't give me a good gut feel when I think about that over 3 to 5 years. And so because I couldn't get to like the escape velocity point, I was like no for that. The second place that I go to, and this is the one I don't really believe in, but other people might invest from this perspective. So the research recommendation, if you believe what I'm about to say. The second thing is I do think Bill Reddy is a pretty solid CEO for what they're trying to do to adultize the business a bit right now. For folks that don't know his history, so Bill Reddy, I'll skip his early career history, but where he came onto the scene really more broadly was he used to be the CEO of a company called Braintree, which was a payments platform. Think about it as Stripe before Stripe. Mm-hmm. They were bought by eBay or PayPal, basically under the eBay umbrella. He then became CEO of Venmo as well. So he was running Braintree and Venmo. He's a payments guy. He then became chief operating officer of PayPal. Then he went over to Google and ran their commerce and payments. He understands commerce and payments. That's the high level. He gets how to transactionalize things. I think that he is a good CEO for being able to bring this business to the next level of conversion. Awesome. If he can do that, I think the business, if you look at this from a 12 to 24 month, as long as everything else, like there's so many I shouldn't say everything else, many macro factors don't go to crap, you could see a pop in the stock price. This going from $17 a share to $25 a share or so, it's not that hard for me to imagine that happening. That's not why I'd be interested in investing in it, though. So that's why I said no to the first category. But if But the second category, like that's not hard to imagine. And so there's upside in like the nearish term and a huge question mark in the medium and long term.
Would you like to bet about the performance of PayPal versus Pinterest over the next 24 months? Because Bill Reddy's old company...
Basically, I'm just following Bill Reddy. Where he goes, I go.
Trades at a PE of 7 and has a buyback yield of 16 with not quite the same growth, but still some growth. Pinterest
Does Bill Reddy become the next CEO of PayPal? Is this
hopefully.
The prodigal son has returned?
Pinterest is fascinating.
It is. It is really interesting.
You said it much more articulately than I. Feels like historically it's been run a little immaturely. Or it's just they've just taken advantage of that they're a growth stock that has some buzz. And I feel like now is the time to run it. You're transitioning. All these hot names in the Valley have to, at some point, PayPal's another great example here. You turn from like the bright new shining star that everyone wants a piece of to just this company that's been around for decades that has had a lot of ups and downs, that's had executive turnover, that's gotten your lunch handed to you by new competitors in the space or behemoths in the space. And all of a sudden you have to like, what your investors demand is you make money and you make money consistently and you reward the owners of the company. Mm-hmm. And I'm not sure that Pinterest navigates that. I'll believe it when I see it.
Yeah.
They might navigate that great in the next 3 years. They might not.
And that's the going back to my near term, medium, long term split is part of what you just said around the consistency. I'll just grab onto that point. Like you're going to make money, you're going to make it consistently. There are things that we've named in here where I can, without squinting very much, see low hanging fruit that they improve upon.
Lots
I
of
say
it.
low. I don't know if it's really low hanging, but it looks low hanging from the outside. So like we mentioned, the 80 cents a share in rest of world. Mm-hmm. If they take that to what was happening over in like the Facebook realm, where the 80 cents, let's say, becomes $1.60 or $2. Oh, wow, that's a lot more revenue that you get from a part of the business. That still doesn't probably get it to what I was talking about with escape velocity. It's like they're like one-time hits you can get here, margin, revenue. But when you have to answer the question of, is this a new paradigm for the company that you can then ride for a while? That's hard to see right now. They could pull it off and it would be awesome. If they're able to pull that off, then to the moon. Like you have a lot of runway as long as you get stock-based compensation.
No, that's where I disagree with you. It's not to the moon. It's like they could have base hits every year for the next 15 years. They could grow their user base from 600 monthly active users to 1 billion. They could take rest of the world revenue 5x. They could do all these things where they would make they would continue to make money. But it's not markets are funny because this could go to $40 a share in the next 3 months because the right person could tweet about it or something, right? Yeah. They could sell some hocus pocus AI story. Totally could happen. But the way this is actually worth more money in a decade is a bunch of base hits. And like I said, I just have to see them execute on that. And the problem right now for a company like Pinterest is there are a lot of more interesting deals out there. Compare this to ServiceNow that grows at 35%. That's from memory, don't quote me. But because all of software and tech has got hit so recently, if you want to take a bet on a growth name, Pinterest is not the most interesting name to take a bet on. And if you want to take a bet on a safe name like a utility or something, utilities are on average up 30% in the past 3 months. You're going to take a bet on something like power generation that doesn't have negative influences from AI. Or a REIT that's going to pay you a really solid dividend. I think Pinterest is caught in the carnage where it's not. There's no way it's the most interesting name to research right now. Sorry, that sounds harsh.
Oh, wow.
Do you think
really mean?
It's honestly like on the top 10 list?
If Bill Reddy were on this call right now, would you say something so harsh to his face?
Yeah. Bill Reddy, come on the podcast. I bet you if I spent 60 minutes with Bill Reddy, I could get really excited about some of the opportunities because there are really exciting opportunities here.
Yeah. And that's we're saying the same thing and then disagreeing on maybe part of the outcome. But I can see a world where this stock could go up 30%, 40%, 50% over the next 12 months. Like it's not hard to envision that. And also part of the reason why it might not do that is because it's hard to see where it would be 3x in 5 years. And it might be that people don't buy the stock because you can't see that. And so like there has to be proof of the bigger payoff in order for the smaller payoff to come through, potentially.
I could see the stock going up 50% easily. I could also see the stock going down 40% and Bill Reddy
then this
going to
acquisition
knock on doors for Zuckerberg and anyone else that will be like, hey, can you please buy me? Because I need more scale to compete. There's not, again, I don't think Meta needs them. So
I think Google is interesting.
I do too, but Google has effectively just said, we're not going to do social. We're going to do other things.
Yeah, but how social is it? And I literally don't know because I haven't logged in 9 years. It seems more search, discovery, and conversion. And that's what I mean. Like there's so much nuance in this that I can't even go into here. But if I think about you pitch the vision of making Google Image actually Pinterest. It's like Google Image Plus or something like that.
It's okay. This is hilarious to say. Its market cap is currently $12 billion. It's too small to matter to Google.
I was thinking about that.
It doesn't even matter.
This would be it'd be like, okay, God, Sam is such a high potential employee. We need him to run something. Buy Pinterest and just go have.
Can we have a $12 billion business for him to go explore? And Bill Reddy's over there like, what? This is my job.
Yeah, exactly.
So then you could go to a Snapchat or something. I don't know their market cap.
No, then that's a failure. That's a failure.
So talk about stock-based compensation, equity without voting right. I mean, that company's organizational structure and governance is a absolute joke. That's not your savior, but at least they could combine ad networks. I just don't feel like there's a good landing spot. And sure, if you show that rest of the world monetization rises rapidly, or you find a way to grow users in the US or Canada where your monetization is solid, $31 annually per user, great. But I think both those paths are really hard.
I think we're back to it's got to be Elon Musk.
Okay.
I'm joking.
There's one thing that we need to mention on the bear case that I didn't get to as I look through all my notes here. There's another big headwind that we haven't even talked about. They don't sell toothpaste and socks.
Yeah.
Right? They sell things that the consumer wants, that the consumer buys when they have extra cash.
Yeah.
And on this here podcast for 3 years, Dougals can't talk about anything about how cash-strapped the U.S. consumer is and how much credit card debt there is and everything else. So if you speculate, this is where the company goes down by more than half. If you speculate that the recession finally arrives and arrives in full force, people go, I mean, they might go to Pinterest to create their dreams of what their house might look like when they get their job back. But they're not buying the mid-century modern furniture.
Because that's where, to go back to something you mentioned earlier, that's the place where the inspiration discovery part of the engine becomes a cute feature, but not a monetizable moat. Right? That's that. You're like, oh, great. I go there because I can barely pay my mortgage, so I want to go somewhere to be inspired to see a better world through jacket. But I'm never going to buy it. And so then you have lower conversion rates that exist there. Advertising dollars start to go down. It becomes a reverse downward spiral. I agree. That is
And again, the CMO that's allocating ad revenue to the 3 largest companies, largest networks in the world, and Pinterest, when their budget gets cut, I don't think they cut Meta first. I'm sure they cut their spending across the board, but if one disappears, it's probably Pinterest. So
I was running marketing at a company a little while ago, and there was this really cheap network. Like we were looking at where we can get more users, paid acquisition, and Yahoo Gemini is super cheap. Like, go after it. Why are we ignoring this? 0 conversion, like 0. I don't mean it was low. Like there was 0.
Super cheap. I see why.
Super cheap.
Okay. So I think we are wrapping. Your official verdict for Pinterest is what, Douglas?
For me, it's a no. A research recommendation for those that might be interested in looking at near-term potential pops.
I'm sad you didn't say that's a no for me, dog. For me, it's a hard no, although it's interesting. And I love our users for sending us stuff like this. It has so much potential. Mm-hmm. It really does have so much potential. And this unique user base and this ability to monetize the rest of the world. And if it was trading at a PE of 7...
Even then, what are you looking for?
Yeah, you're right. I'm
going to keep paying attention to it, though. To your interesting point, I'm going to keep paying attention to Pinterest because the story could shift, but it's just not there for me right now.
It's in this middle ground where it certainly doesn't feel super cheap despite the huge pullback. Yeah, I just don't know. It's the 5-year story. At one point, this stock was, $80 a share? No, almost $90 a share 5 years ago.
Yeah.
Back when growth truly mattered. And now it's just caught in this middle ground where I just think there's so many more interesting names.
Sorry, Bill.
Come on the show, though. So hit us with thoughts, comments. If you disagree with us, we would love to hear. I mean, to be fair, Douglas, I told everyone I would hate every stock pitch that was thrown our way. And I liked this one for 25 minutes. So that's better
that's pretty good.
Yeah,
that's pretty good. You
great.
Bought PayPal for 25 minutes and didn't like it during that period of time. So Pinterest made it past that point at least.
Oh, but if you compare this stock to PayPal, oh my goodness, I'd buy PayPal 100 times out of 100 and be excited about it. Anyway, hit us with thoughts, comments, other ideas. If there's great response to this episode, we may do more investment committees. It won't be an every week thing, but maybe a couple times a year. And what am I missing, Douglas?
I think that's it. SkippyDouglas@gmail.com.
There's tons of great content behind the scenes. I don't think we'll share it, but if that's something premium listeners are at some point interested in, we could do an investment committee with all the source materials behind the scenes. So if you're particularly interested in that, shoot us an email to SkippyDouglas@gmail.com. I think that's it.
Thank you, everybody.